Back, you're watching Your World at 10. Let's go back to our top story tonight. The German Constitutional Court verdict in favour of the European Stability Mechanism, the ESM. For an expert voice, I have with me Lynn Graham-Taylor, fixed income strategist at Rabobank. Lynn, thanks very much for your time. I'm sure this verdict comes as a big relief. Were you anticipating these conditionalities, and really how restrictive do you think they're going to be once the ESM does come into play and once it starts getting down to the business of rescuing beleaguered countries?
I mean, at the moment, it came in at, I guess, the higher, maybe just at the higher end of expectations, although the market had priced in a relatively good result. And we would generally say the conditionality is fairly limited, really, and sort of quite straightforward.
But what happens if... because from what I understand, the Constitutional Court has said that the Parliament, or the German Parliament, has a veto on any fund size expansion. Now, does that pose as a big risk if tomorrow they do need to get the ESM to become a bigger size to be able to help countries like Spain and Italy?
I mean, the fact is, Germany would be far from the only country who'd likely have to go back to their parliament to increase their contribution to the ESM. So it's not really any higher conditionality than a lot of other Eurozone countries would have.
All right, so then I must ask you, how far away are we from till the ESM becomes operational?
I mean, it could be signed in relatively shortly, maybe in the next couple of weeks. It really doesn't seem a hurdle now, so it more seems a question of just getting the paperwork together and ultimately being signed, and then a small amount of mechanical processes to get it up and running.
So what part does this play as part of the full solution? Because, you know, last week we got the ECB's new bond buying program, the OMT. We now seem to have a go-ahead on the ESM. Do you think all the pieces are in place for Europe to very strongly respond to the situation both in Spain and potentially even in Italy? I'll get to the question of whether those two countries will come to the bailout table or not, but at least in terms of strength of response.
We're definitely making strong progress towards it. Obviously, the OMT, which is the ECB bond purchase facility, part of that is it's likely that it won't be able to make purchases in the primary market. So the ESM will have a role to play not only in the primary market but also for the longer dated tenors, where the ECB program looks likely to not really go beyond maturities of 3 years. So that's quite a large amount of a large step forward. However, the other factor to remember is that there's still the ECB's program still must be sterilised, and that throws sort of various issues up, which have yet to be really investigated fully by the market as to the effect they'll have. But definitely, there have been huge strides, positive strides forward, but we're still not there at the final solution quite yet.
But Lynn, none of this will work if neither Spain nor Italy acknowledge the need for a full-fledged bailout or make their application for one, to use the technical term. Because unless they do so, the ECB has no way of putting its bond buying plan into action, and we're back at maybe seeing pressure on the yields.
Well, that's exactly it. You're correct there. In order to force Spain ultimately into accepting a bailout, the market effectively might have to test the resolve of the ECB to buy, but also Spain to enter such a bailout. There's various. We still think it's probably two, maybe 3 weeks off Spain actually looking to seek that bailout. There's some elections, regional elections in Spain in mid-October, which the Prime Minister might look to try and wait until after those have taken place before ultimately accepting the bailout. And you're right, the market might have to pressure Spain into doing it.
So when you say the market might have to pressure Spain, you're saying we could expect to see yields rise back to the 7% level over the next few weeks before Spain is forced to the bailout table, in a sense?
Yeah, they might not have to get up to that sort of a level, but I think if there was a strong signal sent and we saw sort of 100 bip increase or something like that at the shorter tenors, and obviously less at the longer tenors, but if we saw that sort of increase, that would definitely focus the minds of Spanish politicians and likely quicken the process of them actually accepting the bailout. And then, as you say, the important thing is then we'll effectively see the colour of the ECB's money and exactly how this process works.
So you're painting in a potential bailout request by Spain, let's say in mid-October?
Yeah, I think that's, there's many commentators have said that earlier than that, but just from the political background, we think it won't be an immediate process, and there's still, 2 or 3 weeks off. You've got to remember that there's still no publicly available, well, really, any information on exactly what conditionality Spain or any Eurozone member seeking to enter to benefit from these purchases, what sort of conditionality they'll have to accept, what the involvement of the IMF will be. There's a lot of details that are still fairly unclear.
So I may be getting ahead of myself here, but if in case... From that point, go ahead, Lynn.
Well, I was just going to say, from that point of view, you can't necessarily blame the Spanish government from holding off, entering such a bailout when actually they don't know the conditionality yet associated with it.
No, so I fully appreciate.
And obviously, there's some bargaining there as well.
I fully appreciate that situation, and I'm not trying to get ahead of myself, but in case Spain does come through with a bailout request, let's say middle of October or even November, one would anticipate that markets would be less nervous about such a bailout request, simply because now the action plan seems to be largely in place. What the ESM would do, because now it seems to have gotten the go-through to be activated, how the ECB would respond. So let's say last year, everybody was terribly nervous about what would happen if a country like Spain were to request a bailout. That nervousness would be far reduced, right?
The nervousness would definitely be reduced, but I think everyone still wants to see exactly what the ECB is prepared to do and exactly how this will work. And so ultimately, Spain, one of these countries, will have to seek a bailout as part of the ultimate solution to test the ECB's resolve. And perhaps also as part of that process, we'll eventually see the ECB having to roll along the curve in terms of the maturities that it's prepared to purchase, and depending on the exact mechanics, whether they'll have to eventually make unsterilised purchases.
All right, Lynn, final question. We've spent the last 3 years looking for some sort of lasting solution to this sovereign debt crisis in Europe, and I'm not for a moment saying we found the perfect solution and that things are going to get better overnight, but have we made substantial progress, at least in the last few months, what with the kind of work that the ECB's done, the clearance for the ESM, and all this talk about a European banking union, fiscal consolidation? We seem to have made substantial progress, right?
Yes, we definitely have made substantial progress. There's still a journey to go on. But if you look at where both the ECB, in showing its commitment to keeping the Eurozone together, and where politicians have come from in terms of mutualisation of liabilities, even if it's only to a limited extent, well, still a significant amount, but relatively limited so far. Yeah, it's a huge step change in attitudes over particularly in the last year, I'd say.
All right, that's a rare Europe conversation I've had that's ended on a partly positive note. Lynn, thanks very much for joining me and taking us through the implications of that German Constitutional Court announcement. With that, let's quickly wrap up this show. But before I go, here's a quick reminder that the way